Does high inflation mean doom for your stock portfolio? Let's talk about it. Here's the thing, you're doomed, and it's over. My kid, I'm a jokester. Now let's get serious. 1946, 1947, and 1948 saw some very high inflation, the highest we've seen in the last 100 years, in fact. Seems doomful. The S&P 500 did a negative 12.05% in 1946, 2.56% in 1947, and 9.51% in 1948. Not great, but certainly not doomed. From the beginning of 1945 to the end of 1950, which again encompasses some of the worst inflation we've ever seen, the S&P 500 did 117.3%, or an annualized return of 13.81%. $1 million would have grown to $2,172,970. Short-term pain, yes, but long-term growth also a very big yes. 1979 had average inflation of 11.254%. 1980 saw average inflation for the year of 13.549%. 1981 of 10.335%. The S&P 500 did 17.12%, 26.02%, and a negative 7.22% those years. Again, some short-term pain in 1981 as inflation finally started to come down, weirdly enough, but we're still seeing growth. And 1982 followed up the down year with a 30.11% return. I'd also note the short-term volatility was not anything like the previous example, with the down year in the market coming at the end of the high inflation, not at the beginning. Look at this graph. Blue bars represent calendar year returns in the S&P 500. Orange dots represent average inflation in that calendar year. Any pattern. Does high inflation guarantee doom in the stock market? Well, it definitely doesn't guarantee doom, but it also doesn't guarantee success. It seems there are no guarantees. That's why you get a return on your money when you invest. That makes sense. Let's take a step back. We've looked at some isolated and extreme years. The data has been very interesting, but not practical. You shouldn't be investing in 2 to 5 year increments if you are serious about growing your wealth and becoming financially independent. The real miracle of investing in the stock market happens over time. I scoured this data from 1990 to 2021 to see what inflation looked like over an extended period of time. Here's what I found. The highest inflationary years were 1990, 2021, 1991, and 2008. Some of the highest inflationary months, 7.036%, 6.29%, and 5.6% a few times. Long-term average inflation in the US has been 3.27%. There were 77 months out of the 384 months over this time span that inflation exceeded 3.27%. That is 20.05% of the time. Over this time period, we didn't see anything like we did in the 1940s, 1970s, or 1980s, but we still saw some spikes, and we still saw 20% of the months exceed the long-term average inflation rate. So, what does it all mean? I don't know. But I do know long-term government bonds did 7.8% over this time period. Long-term corporate bonds did 8%. The S&P 500 index did 10.8%. The CRSP 1 through 10 index did 10.9%. If you had invested $100,000, you'd have this at the end of 2021, depending on the index. What about 500,000 invested? Now, past performance is no guarantee of future results. What if the next 32 years only averages 7%? What about 6%? We don't know anything about what the future holds. Not even inflation seems to be a good predictor. Investing in the stock market does reward discipline though. It seems easy, even obvious, especially as you're looking at this, but it is not when you are in it. It is really hard to maintain perspective when you are in it, but perspective you must maintain. Until next time. Voice? I can't do Yoda voice, but perspective you must maintain. Stupid. That is 20.05